So, big news for GLU Mobile shareholders that have been underwater or just recently bought. Closed yesterday at $9.80. And last night after the bell, EA Sports announced that it was going to acquire shares, believe around $12.50. Shares closed at $12.74 today. But what I want to share with you is what we saw going into this announcement and why following unusual option activity is good if you know what you're looking for and how to avoid these common mistakes that I've seen over the last 15 years. That's why I follow the money, but you have to be strategic in how you follow the money. And if you are, you can get ahead of big moves like we saw in GLU and also be able to make money. Oftentimes with options, you could be right on direction and lose money. And this is what happened with GLU Mobile with a big amount of calls that happened prior to this announcement. And this type of activity we often see before breaking news happens that send shares either higher or lower. So that's why I follow the money. And this is another episode of Follow the Money with Joshua Belanger. And we'll take a look here at GLU Mobile. So as I said, we don't have to do too much analysis here. This is almost a case study of why it's important to follow the money, but at the same time, understand how to trade it successfully. So a big move here. If you own shares, great. But if we take a look here at the weekly chart, the 3-year weekly, okay. So if you had some shares, even if you bought here at 12, you had a little bit of a roller coaster. So we're not looking at, many people underwater here. You can kind of assume that those that have owned shares, even at these levels here, they had the roller coaster ride here, but getting ahead here. But anyways, big news, especially with this news here, is one of the things that's interesting is that this one had a high short interest, and it's kind of interesting that they came out on a Tuesday or a Monday evening to announce this. EA announces that they were going to buy shares here, and that's interesting because why not on Monday morning? Why Monday after or Monday after the market close? Typically, what you see there, especially when they're going into a weekend, they're structuring a deal on an M&A, and you get everything kind of lined up here. So what we're looking at here, go back to the daily, what I want to show you is following the money. This is why I follow the money here, and we can go back to 128, and if we look here in the June contract with 141 days, 20,000 contracts traded on the 15 strike. This is going to add open interest. We'll show you in a second here. But what we start to look at here is that this was big, what would be defined as unusual option activity. Now, I will be the first one to say unusual options activity is meaningless unless you specifically know why it's important. That's always the caveat. People talk about unusual options activity. It's very broad, can be exciting, but you have to know what you're looking for. This is why you want to follow the money, but you have to know why you're following the money. So on this one, if we follow the money, if we start to break down and create some analysis, 141 days, we see that this 15 strike was happening. This is the same time that we were seeing these big positions put on these hard to borrow names, trying to squeeze these shorts. Probably the reason why we saw this specific activity, because when you look at a share or when you look at stock that's trading $9, and if they're buying these and they were buying these at 40 cents to 55 cents, you would need prices to exceed at expiration in the next 141 days to go above $15.40 to $15.55 at expiration. Now, if we got a big move, those calls would juice up, and we would see those increase before then. But that's theoretically what we would need at expiration in the next 141 days. It's a big move. $9 to $15. It's a very significant move. You don't really typically see that. That's why these kind of stocks are exciting, because when you see this type of positioning here, when there's big money going into here, that means something could be coming. And typically it is something coming, because something like this, I've seen this name many times. I thought it was going to be acquired. Zynga is another one, because this is in the space. You have a player like EA. It's very stagnant, and they need to acquire right now these other big companies. So when I see something like this in the money in the options market, money going into a name like this is always what I refer to as a wild card. So this would have been too extreme for me. And these people who bought here looking for some kind of big move are going to be, are even though the news came out that something happened, that that sent shares soaring, it wasn't to the moon in this case. And a lot of people who bought these 15 calls in June are now losing money, and they're going to lose money because unless a white knight comes and bids higher, which is not going to be the case, these calls are going to expire worthless. So if we take a look at the next day, this is typically what we want to see is we see activity here, especially with 141 days. Usually if there's pressing news, we're going to see it more closer to the shorter term contracts. But on this one, we go to the 29th here, and we start to see that from that 20,000, some of it two-sided trading, but those 15 calls were bought here. We see a little bit more trading here. And then all of a sudden we see the June 10 calls, which is interesting as well. You see 10,000 there. When we start to look at some of the closer for 21 days, this is kind of the most interesting here. With 21 days, and this is on the 29th, we see the 8 traded, and this looks to be a spread. They bought the 8s and sold the 11s. So with the prices at $8.81, they bought these with 80 cents in the money, and they sold the 11. This would be the strategic way of trying to position it. Now, when you see something on 21 days, that's a little bit not a little bit, that is shorter term. But if you see this in the June or September with 141 days at the time or 231, and they put that kind of position on, that's very strategic, and that's somebody that understands how to position. When you see something where they're almost like these lotto ticket trades and they're so far away out of the money, I mean, not saying that their pricing or that the offer from a company couldn't have exceeded $15, but when you start to understand how companies are valued, I mean, it was a very high price tag on this. It could have been $20, but again, you can't play for these big to the moon plays if you want to be consistent. If you want to follow the money, as we talk about in our videos, then you want to be strategic and be able to play these and manage them, be right, and also make money here. So not only these 10s were playing or traded in the 10s traded in June 10,000 times, the February contracts were opened as well. So if we just look at this one here, we do a vertical, and let's just say we follow it along with the same trade here, the 8, and then they sold the 11. So look to do that for $1.05 at that time on the 29th there. So if we go to the 30th here, that was a weekend, and on the February 1st here. So some decent activity here, and I'm not going to go through every day here, but what we wanted to see was that accumulation, and we saw that on the 28th of January and the 29th. So again, it was a precursor to the news. Now, did they know exactly when this deal was going to be announced? No. Did we know? No. But what we did see is that we saw positioning in the options market because options give liquidity and also disguising and the leverage that's needed to not move a stock and also get a big return to outlay a smaller amount of money if they're right. Now, how did someone know this information? Who knows? Could be lucky. Could have been good research, good timing, and knowing exactly some inner workings of EA, of knowing that they're looking for a deal or whatnot. Typically, though, these deals take a couple months to put together. So someone just doesn't wake up, a company like EA doesn't wake up one day and say, hey, we want, they do, but they don't announce it like 2 days later. Typically, this is something that takes time. They got to look at the company. It's a team that goes in and they start to go through it. So it takes typically a couple months for an M&A. So when you typically see something like this beforehand, especially after the news, probably somebody knew something. And we see it pretty often. How do they know it? Who knows? But what we're looking at is public information, and that's all that matters. So when we go into, and we fast forward to today's date, on here, we can see that our $1.05 debit spread provided on 10 contracts a $2,000 return. Now, what I want to also take a look at is that if you played it with the spread, buying one, selling another, and you could have done buying a single leg more closer in the money. But these people that had bought this June contract here, all the way at the 15 strike, They see this news, they think they're going to wake up in the morning to a jackpot of money, and then they open their account and then they see this. And this is the big letdown. This is what happens, and it really is a sour note, where you see the stock up 35%, but your calls, the trade that you took on, the YOLO type of trade or just the very lotto ticket type of trade, now that 40, 55 cents is trading at 15, 20 cents. So a question I received today was, what do I do? Well, here, you just get out of it. I mean, unless a higher bid comes, which I don't think someone's going to come in. I don't think there's too many names in this space that are going to come in here and bid up this price. This is just over. Unfortunately, it was just wrong. The 10 call here, if we look back at that, so this was 270 that it closed. Again, playing a little bit more strategic and smart. On the 29th here, go back to this one here. This was $1.60 by $1.65. So they were able to get paid on this one, but honestly, it wasn't as much. The risk to reward on this wasn't that great. And the reason why is because at this point, the implied volatility is just completely taken out of it. The news is out. There's nothing else there, so it gets walloped there. So the benefit of this one was that if someone did the spread, that they sold the further out, and ideally they sold the 15 and bought a 10 or some other spread that was closer to the money. Well, no, actually, if they sold the 12.50 and bought the 10 at that time, they would have been able to capture that complete move and the volatility in that 12.5. So this is why it's important to understand how to trade options. It's a very strategic. It takes a little bit of understanding of how to outlay what your ideas. Options are volatility products at the end of the day, and understanding how to use them properly is the trade-off of trading just the stock. Now, one of the other ways as well is you could have bought the stock for $9.40 and sold at $12.50. Now, it takes up a little bit more capital, but those are just the different ways of how to trade the market, and that's the exciting thing. There's not one way to make money, but there's different ways to do it and also create success in different ways, and also managing your risk as well. So that's what I have for you today on Follow the Money. I think it's important, and I know it's important, to understand how to leverage options in a way that's strategic and also successful. So that's what I have. This is why it's important for me to follow the money, because I see this stuff very often. I've seen this over the last 15 years, and you continuously see it. Somebody has leaky lips. Somebody knows something out there. And typically they're going to go in the options market and they're going to put on their position to benefit if they're all right. So we've seen it before in previous episodes of Follow the Money, and we're going to continuously see it. So make sure you like, make sure you subscribe, leave a comment. What do you think? Someone knew something? Someone didn't know something? What do you think? And also, if you did get in this one, let me know how it turned out for you. I know some people on Twitter may have followed some people that had tweeted about this unusual option activity, but this is why unusual option activity is very generic. You got to know what you're talking about. You got to know what you're looking for. That's why I follow hot money, which is a definition of following the money and also unusual option activity, but it's specific. I know what I'm looking for, and it's very short-term upside opportunities. So that's what I have for you today. I'll see you in the next video, and until then, good trading.